There we go. So thanks again for joining us for our Score Up Booster Credit Fast Without Paying Anyone online workshop. Today's workshop is presented to you by USA Homeownership Foundation, and I'm Connie Dertarosian with USA Homeownership Foundation, a HUD-approved housing counseling agency, and we're doing this in partnership with our lender partner, US Bank, and we have Juan. If you'd like to introduce yourself, go right ahead.
Of course. My name is Juan Martinez. I'm a mortgage loan officer with US Bank, and happy to be here to go over some best practices and helping increasing credit scores.
Great. So let's jump right into our workshop. So as I said, I'm with USA Homeownership Foundation. We're also known as VAREP, and we are a national nonprofit HUD agency. Our headquarters is in Corona, but we do help anybody who's in the United States who needs any kind of housing, rental credit, foreclosure prevention, and of course, home buying help. All our services are offered at no cost. Our mission is we're dedicated to increasing sustainable homeownership, financial literacy, education, VA loan awareness, and economic opportunities for active military and veteran communities. And although our focus is on helping our service members, anyone can come to our office and get assistance. So we help patriots and anybody throughout the country. You can visit myhomeownership.org. That's our website. And we have our email and phone number. You can always call us for assistance. So what type of services do we offer? We help with budget, financial management, of course, credit improvement, which we're going to be talking about today, reducing those debts and paying them off in hopes of, hopefully you'll be able to buy a home. We do down payment assistance. And of course, our homebuyer education workshop covers the VA loan because we really want our veterans and active military individuals to utilize their VA loan benefit. So we can help with their certificate of eligibility, answer questions about the VA loan, and then, of course, down payment assistance programs. Those are offered throughout the United States through the city, county. Many of the banks have them, like US Bank, and Juan can share some information about those, as well as first-time buyer loan programs. And if you do want to take advantage of those, we offer a home buyer workshop where you get your HUD home buyer certificate, which would qualify for you for any of those down payment programs, which can range from $5,000 up to, I think, $120,000. So certainly come to us if you're looking to buy a home and need information on that. And we do help with foreclosure prevention and loan modifications and rental counseling as well. As I said, all our services offered no cost. We just ask that you complete an intake form at myhomeownership.org. You'll click on the complete the intake form, or you can scan that QR code that's on the screen, create an account, and you can fill out our intake form, go back to it if you need to input information. Once we get your intake, then we'll go ahead and call you to set up an appointment. So today we're going to be talking about credit and how to establish credit, how to improve your credit, how to pay down those debts, and lots of tips on how to boost that credit score quickly. So there's lots of companies out there that charge you. We are a nonprofit. We do not charge for our services. We can run your credit. It's a soft pull. And I encourage you to utilize the tips you're going to learn today and do it yourself because you'll be able to empower yourself and improve your credit score. So I'm going to turn it over to Juan, who's going to go over some of the basics on establishing good credit.
Alrighty. So establishing good credit, it comes down to the basic, right? Being able to repay a loan or credit card as agreed. So if you go to a lender or a bank and you ask to get a credit card or a loan, right? It comes down to be able to pay that with the terms agreed upon. Failure to establish and maintain good credit will definitely make it difficult in the future to be able to get any credit, right? Let's just say you're in a tough spot and you need to get a loan. At that point, it'll make it difficult if you haven't established that good relationship or that good credit. And it also comes down to employment, right? Some employers run your credit. Renting a home, you have to apply through the landlord and you have to run credit. And buying a home, of course, you have to make sure you establish good credit history as well. All right, next
And that can
slide.
be expensive, right? If you don't have good credit, it can get very expensive.
Exactly, and again, as Connie said, right? If you have a better credit score, you'll obviously get favorable terms, right? Opposed to you having a bad credit score, you'll probably get unfavorable terms at that point. So when it comes to managing your finances and working towards your financial goals, right? It requires discipline. So being able to have your financial goals set right, having your ducks in a row, will lead to be able to have good credit in the long run. And having good credit or having credit in general is a privilege, right? You're showing someone that, hey, I'm able to establish credit. I'm able to repay the debt as agreed upon, right? Um, Aside from that, it's an impaired credit or payment history may prevent you from saving money sometimes, achieving your goals, or accumulating wealth, or garnering employment, right? So you got to make sure you establish that good credit. So some of the factors that influence credit scores, right? It's credit scores are based on information on your credit report. So when a lender pulls your credit report, it's going to be based off the credit report and whatever is in there, right? Whether it's positive or negative, that's how the credit score is gonna be established. There's 5 primary factors, right? That we'll show you on the next slide of what makes up the credit score. Income is not one of the factors when it comes to your credit score in general. Okay, so these are the 5 factors in the little pie chart. The most importantly, and the one that makes the biggest impact on your credit score is the payment history. That's 35% of your credit score, right? So it's really important that you always make your payments on time. Even making one late payment on your credit can make a pretty good dent and affect your credit score. So try to avoid late payments, judgments, bankruptcies, right? Tax liens. All of those can lower your credit score, which is your payment history, okay? The next bucket, it's going to be outstanding debts. Typically, it's recommended that you use 30% or less of your credit limit, right? So if you have a credit card that's $1,000 limits and you use 900 out of those 1,000, that's gonna affect your credit score using 90% of your credit limit. So credit utilization. Always keep in mind or have that on top of mind, right? 30% or less. I give best practice, right, is use it for small little expenses, right? You utilize credit for the overall end goal, whether it's purchasing a car or purchasing a home. Little small debt, right? Pay it off. Small debt, pay it off. Have the money to pay the credit that you're using. That's a good practice that I always teach. The next bucket is going to be the length of credit history. That's going to take time, right? If you're 18 years old and you're just establishing credit, it's going to take a couple of years to establish the credit history. But just maintaining those good relationships and maintaining those payments on time. Okay, 10% is going to be recent inquiries. So inquiries is when you are applying for credit. So if you go to a bank and they run your credit, that's one inquiry, right? Next month you go and apply for an auto loan, that's another inquiry. So if you're continuing to apply and apply, that's going to increase your inquiries, right? And that's 10% of your credit. So you want to be cautious of how many times you're applying, and within a month, 2 months, 3 months, right? 4 months, 6 month period. As it says here, an acceptable number of inquiries would be less than 5 in 2 years of time. Okay. The last thing is the types of credit. That's 10%. So you want to make sure you have different types of credit on your credit report, right? Credit cards, auto loans, right? Revolving debts. Having a utilization, right? A mix of credit, it's going to allow lenders to see, hey, they're capable of maintaining good credit with all these different aspects of credit. And that's going to help you increase your credit score. So that's 10% of your credit score. Okay, so you have a great option, right? So you can go to www.annualcreditreport.com and you can pull your credit report there. Um, it used to be once a year, but I changed from COVID. From what Connie mentioned yesterday, I guess you could pull it. What was it again, Connie? Was it
Once a week now
once a week now?
from
So you
each
can
of the
pull it,
bureaus.
which is really really cool because before it used to be once a year. So now once a week you can pull it. So it doesn't give you a score, right? But it does let you know what's on your credit report. So you can take a look at what's affecting your credit score, and then at that point you can contact the credit bureaus, right? Equifax, Experian, and TransUnion. If you see anything that you don't recognize, you see anything that's you're like, hey, that wasn't me, right? You can reach out to them and dispute it, and then they'll take care of that. Okay. There are different ways you can check your credit score. You can go to www.myfico.com. You can go to creditkarma.com and mybankrate.com, which allows you to get your credit score for free. As well, if you bank with the bank, right? U.S. Bank, Wells Fargo, any bank, right? They'll have usually if you have a bank account with them and a credit card, you should be able to look at your credit score that way as well for free. Okay, so the most common credit score that's used is the FICO score. Okay, that one's usually ranging from 300 to 900. You want to be between 720 and 850. That's excellent credit score. Good credit score is 680 to 719. Fair credit score is from 640 to 679, and then 350 to 639 is poor credit score, and anything below 349 is no credit. Again, generally, like I shared before, generally the higher credit score you have, you'll get favorable terms, and it's a privilege, right? You want to have those favorable terms, and here credit is everything. You want to buy a car, want to buy a house, you want to rent, employment, as I shared before, everything you need to have good credit. Okay. Are you going to paint the video on this one, Connie, or do you want me to go over the slide first?
Yeah, no, I'll play the video and then you can go over the. Alrighty. Give me just a second here, and I'll get it going.
How does your credit score impact the home buying experience? A mortgage lender will primarily consider your income, employment history, current monthly debts, assets, rental payment history, the size of the loan, and your down payment when evaluating their risk in lending you money. So while your credit score isn't the only factor, it is a significant one. Some mortgage products have a minimum credit score requirement, so it's important to maximize your credit score well in advance of starting the home buying process. Credit scores can typically range from 300 to 850, and any credit score above 740 is generally considered excellent. Among other things, debts such as credit cards, as well as auto loans, student and personal loans, impact your credit score, along with your bill payment history. Consistently paying your bills on time can help ensure your credit remains healthy. So, it's important to remember that if your credit score isn't where you want it to be, you can improve it over time. This can help you better compete in the market for the house you want, make it easier to handle the upfront costs of buying a home, and help make home ownership easier to manage in the long run, as this may provide you with more available financing options, getting you one step closer to making that property you love your home.
Okay.
And we're back. Okay, so as the video shared, right? One of the biggest factors that a lender will look for, and it's not the only factor, but one of the biggest factors is going to be credit, right? So every lender is a little bit different, right? U.S. Bank specifically, the lowest credit score you can have is 600 to qualify for a home, but each lender has their own guidelines that they set. You obviously you don't want to be at the lower credit score, right? You want to be at the higher excellent credit score to get a favorable interest rate, right? And not only that, with the higher credit score, you can have a higher what's called debt to income ratios, which will give you more buying power when buying a home. I know this class is not about a home buying process, but it's something that we can definitely get into, right? Once that time comes. but it's something to take in consideration when you think about, hey, why do I need good credit history, right? Not only that, they take a look at your income, right? They're gonna take a look at your two-year average of income, your savings, how much assets you have, and employment. Typically, they ask for a 2-year employment history. It doesn't have to be on the same job, just a 2-year employment history. Okay. And I shared that every lender is a little bit different from what it's required on the different programs that are available, right? There's VA loans, personal favorite of mine, FHA loans, right? Conventional loans. Each one has their own guidelines and specific credit scores that they require. For example, a conventional loan would be a 640 credit score that's required. Um, FHA, we go as low as 600. VA as well. VA, again, doesn't have a specific credit score, but each lender is a little bit different. So US Bank specifically would be a 600 credit score. And then there's also different, they're called portfolio loans, right? That specific banks offer that have different credit requirements. And for specifically for down payment assistance, they ask you to have a better credit score, right? So as a first-time home buyer, you want to have a higher credit score to take advantage of those down payment assistance programs as well. So it's to your best interest to build that credit and have that higher credit score.
Excellent. So great information. Thank you, Juan. And if you guys do have questions, feel free to put them in the chat box or in the question box, and we'll be happy to answer your questions. That was some great information about lending and also on what the minimum FICO scores are. I think one of the questions that we had is, what is the minimum FICO score in order to buy a home? What do I need? What's the goal? What do I need to get? Because a lot of people hear about 620, but it sounds like, or feel free to jump in and add to that if you'd like. Like it can range depending on what product you're gonna be going with.
Yeah, absolutely. So as I was sharing, the 600 is going to be where most of the time you want to at least be at to be able to qualify for lending. But that's not going to give you the favorable terms. You're going to get a higher interest rates, right? You may not qualify for any down payment assistance at that point. So if you want favorable terms, you should be looking anywhere above 700. But to qualify for a mortgage, 600 is typically the key point for FHA, VA for government-backed loans. Conventional loans they're called Fannie Mae, the investors Fannie Mae and Freddie Mac, 640. That's what US Bank asked specifically. Each lender is a little bit different. Some might be higher, some might be lower. And then for down payment assistance, I know we work with CalHFA as well. With their down payment assistance, they do require either a 660 or 680 credit scores. So those are a little bit higher to be able to use the down payment assistance programs.
Okay, great. Perfect. Thank you so much.
course.
So yeah, for sure, we do want, of course, the goal is home ownership, but if you're not quite there yet, we can help you get to that credit score. And I know that some of the things that our housing counselor, Thomas and Christine, work with our clients to get them as high as possible, because we want you to get those good rates and get that down payment assistance if you can, or any kind of grants that can help you get into home ownership. So how do we get that score up? Establish and maintain good credit by paying your bills on time. We can't reinforce that enough. Pay your bills on time before the due date, because sometimes things happen, and if they don't get the payment on time, it might be late, and you certainly don't want that impacting your score. Set up auto payments with your bank. They make it super easy now. And what we suggest is use your credit card, kind of what Juan alluded to. Use your credit cards and then pay them in full at the end of the month. That's a great way to utilize your credit and utilize it, responsibly. So that's what lenders want to see. That's how you increase your credit score. Again, you're paying down your balance on your credit. So if you're going to keep your balance at 30% or lower, that also is going to help to improve your credit score. Avoid overdraft fees, handle your banking accounts appropriately, don't bounce checks, don't overdraw. Check your credit. Utilize that annualcreditreport.com to check your credit and make sure everything that's on there is accurate, and know that you can get credit help free from us. As I said, we're a HUD nonprofit agency. We don't charge anything for it, and we can run your credit, go over it, and tell you what kind of things you need to do to improve your credit score. So there's a couple different methods to pay down your debt. One is we call it the snowball method. And that's where it's a debt repayment strategy that involves paying off your smallest debts first while making payments on larger payments. So you kind of list your debts in order from smallest to largest and pay the minimum payments, but then plan on paying off those small debts, then take the money that you were using to pay off that small debt and roll it over to the next one, and then pay off the next one, and so forth, and keep continuing until all debts are paid off. The snowball method can be a good motivator to keep you paying off debt. It doesn't save as much money as the avalanche method, which is another way of paying off your debt. So in that method, you prioritize your debts by interest rate, go from highest to lowest interest rates. And then you'll make the monthly payments on all your debts, and then put extra money towards paying the debt with the highest interest rate and pay that off first. Once that's paid off, then you move to the next highest and pay that off until all things are paid off. This is considered one of the most cost-effective because it helps you pay less interest over a period of time. So if you do have some debt on credit cards, you can consider the snowball or the avalanche method in paying down those debts, but with the goal of paying them off and getting them off your credit. That's going to certainly help you to improve your score. Also, make sure that all the information is correct on your report. So look at it. If you haven't looked at it, look at it at least every couple of months and make sure that the information that's on there is correct. Correct any errors. You can do that through annualcreditreport.com or going to each individual Experian, Equifax, or TransUnion websites. Credit scores reflect long-term patterns of your usage, so pay your bills on time and keep those credit cards open. Like Juan said, the long history is going to help you to improve your score overall. And if you have bad things on there, the farther you get away from those things and the more you replace the bad with the good, that's going to help to improve your score. So your overall picture will get better as you replace the bad with the good and continue to get farther away from those events. Avoid credit repair companies. There's no quick fix, although they'll tell you there is, or you could pay $250 a month. Avoid those credit repair companies because pretty much all of them are scams. And we're telling you what you can do right now. If you have collections, you can contact them. You can work out a payment plan or pay them off, usually at a fraction of what the cost of their original debt was. And we had a client that had used that Lexington law and just got a settlement check from the CFPB because they got sued and got like $500 back because they had been paying that company who basically didn't do anything. And then they ended up coming to us and Thomas worked with them to pay down their debts. So as we just, came off the holidays, you can put holiday bonuses, your gifts and money that you get, your tax returns. Consider it an opportunity for positive financial footing, and rather than go into debt, use that money to pay down your debts. So assess your needs and financial goals before spending, and take a balanced approach to planning by using the bonus for improving or strengthening your financial goals. So you can pay down those high interest credit cards and auto loans, pay those things off. And you can also start towards preparing an emergency fund. So hopefully you all have an emergency fund that if something goes wrong, you've got some money in the bank that you can utilize. We encourage having at least 3 months of your monthly payments in the bank. 3 to 6 months is a good idea. You can also save for major purchases, and then once you have the money, go ahead and put it on the credit card, but then pay it off as soon as the bill comes, so that way you're showing good use of your credit. You can place the money in a high yield savings account, IRA, mutual fund, and maybe make some money on it. Take a course that can increase your income, and avoid credit card usage for the holiday expenses. You know, if you don't have the money, then it's probably not a good idea to go out spending money. You don't have traveling and doing all of that stuff. It's really important to be managing your finances, and there's a lot of stuff that you can do, spending time with family and such that doesn't cost money, right? So a lot of times people say, well, how do I start? What's the best way to, if I don't have any credit or I need to reestablish my credit? Secured credit cards are very helpful for establishing credit or reestablishing credit. So basically what you do is deposit the funds in a savings account, and then you use the credit against your own funds to show that you can use your credit responsibly. Those payments are reported to the credit bureaus, and once you're established, then you can ask to be switched to a traditional credit account. Another way is to become an authorized user. So you can ask someone if you can be an authorized user on their account. The primary account holder is ultimately going to be responsible for the payments, but you being on there, using the card and paying it off will help to establish your credit. It will help you rebuild your credit and boost those credit scores. I was just telling Juan, I did this for my son, and he got like a 780 credit score when he had no credit whatsoever. So, so it really benefited him. And then I said, okay, now it's time to get your own credit card and use it and pay it off at the end of the month. So, again, you got to teach, how to use the credit responsibly. If you don't have the money, you don't go charging stuff. Generally, no credit check is required to be an authorized user. And once the credit is established, you can get your own credit card and start utilizing credit responsibly. So those are a couple of ways where you can establish credit. There's also some reporting on-time rental payment programs that you can utilize. So you can enroll in these programs, and they report on-time rental payments to credit bureaus to help you build up your credit score. Some of them allow you to pay your rent in 2 parts, while they pay your rent by the first of the month. So these programs help with cash flow and credit building and positive rental history. They do charge a fee for this service, so you definitely want to check them out. And, if that's something that you want to look into, check out the companies and make sure, that it's really something you want to do. But it's certainly better than having a late fee or paying your rent late and threatening eviction, right? If you don't happen to have it. So a couple of these programs are called Flex, Jetty Rent. There's Boost by Experian, which is free and helps to have your rental payments and utility payments reported to the credit bureaus. So definitely check out the fees and the cost for this service, and of course make sure you're making your payments on time, right? That's most importantly, that you make your payments on time. And you can also check with your landlord or rental office to see if they have any rent reporting services. As I said, there are those third-party rental reporting services, but just check out the fees and make sure that it's something that you want to do and it's going to benefit you. And it may require your landlord also to verify your rent. So there's a couple of programs where you can have your utility, cell phone, insurance, rental payments report to the credit bureau. One of them is Experian Boost or Self, and they will, report your rental payments, cell phone, utility payments, so you can start building your credit history. You select a company, connect your bank accounts and the selected bills you want to have reported. Just remember that you want to have on-time payments because you want good stuff on your credit, right? That's for you to build your credit score and build your credit history. And you'll see over time it will help you improve your score. Just make sure you're making those payments on time. So avoid pitfalls that don't build your credit. Like one of those that we talk about is payday loans. Those are, you may find out that your car broke down, you don't have the money, you have an unexpected emergency. So you're like, hey, let me go to one of these payday loan places. Unfortunately, they are short-term financial loans and they are not good deals. Okay. They're very expensive. And if you miss a payment, it is reported to the credit bureau. On-time payments are not reported to the credit bureau, so it doesn't really benefit you. And it has excessive interest rates and fees that are up to 800%. So they're hard to get out of. It's really best to avoid payday loans at all cost. There are a couple other options that may be available. You could have a garage sale, sell items you don't need, apply for a personal loan from a credit union, get a part-time job or a gig job to earn some extra money. Get some resources. There's lots of resources for food and utility help, borrow from family and friends, or better yet, if you have to get a cash advance from your credit card, it's still going to be a better deal than a payday loan. Okay. They just put you in a worse financial condition and it's very hard to get out of. They charge a whole lot of money. That's why we say it's really important to establish an emergency fund so you have that money so you don't have to go to those payday loan lenders. Weigh your options before you do this. Because as I say, if you read the fine print on them, they're very, very expensive. And avoid pitfalls that might not help you with your credit. So, cash is, of course, this. If you only use cash and all the cash you have is gone, well, then you can't spend any more cash, right? So be responsible with your money. Personal checks and debit cards are convenient tools for making payments, but just know that, those are attached to your bank account. So if there's no money in the bank, be bouncing your check or overdrafting your account. Use them responsibly in line with your budget. So it's really important to establish a spending plan and keep yourself on track. So there's lots of online tools that can help you with budgeting and creating a spending plan. Lots of the banks have them as well. You can use the envelope method for paying bills, where back in the old days, they used to take the cash and put the specific amount for your rent or mortgage, groceries in envelopes. And once that money is gone, then your monthly obligations are met and you can't overspend. So same thing, same concept as having a spending plan and making sure that you're not going over your budget every month. So it really comes down to you. And don't overuse your debit cards. Direct deposit payments from employers is really convenient, but just know that when the money's gone, the money's gone. So it's important to create a spending plan, stick to it, create your budget, and make sure that you have your bills set on auto paid so you can't miss those payments. Hide or cut up your credit cards or debit cards if you're not, you can't trust yourself. And you can also create a separate savings account. This is what I like to do, is create a separate savings account where I automatically have the money go out each week or each payday, and you put the money away and you forget about it. And it's a great way to save money and create an emergency savings plan. Or if you're thinking about buying a home, it could be your home buying fund, and automatically that money's going in there and you're saving for large purchases. And then you can buy it with a credit card, and then you have the money so you can pay it off at the end of the month. And that will also show that you're using your credit responsibly, and it will help to boost your credit score. So, if you guys are interested, we talked a lot about credit, but if you are considering home buying, we want to invite you to join us on January 25th, and we're going to be having a Help Home Buyer Education workshop in Rancho Cucamonga. It's free, and you can earn your home buyer certificate that qualifies you for up to $120,000 in down payment assistance. We have all different kinds of, we'll be talking about the VA loan, FHA, conventional loans, as well as various down payment programs there. And so we invite you guys, if you're in the Inland Empire, Southern California area and want to attend, please attend our workshop on January 25th. It includes the breakfast and lunch. It's free, and you'll get to meet us in person. So you can sign up by scanning the QR code. You can also go to My Homeownership, go under our events, and you can sign up there as well. So we've covered a lot of information today, a lot of it about credit. We talked a little bit about homeownership. So if you guys have questions, feel free to send the questions in the chat box. We'll be happy to answer your questions for you. And just know that we're here. As I said, we're a HUD-approved nonprofit, and our housing counselor is a veteran himself, a Marine veteran, so he talks vet to vet, understands maybe the financial implications of being a veteran. Of course, the VA loan, we want you to utilize that benefit that you've earned that benefit. We want you to utilize it. But we also want you to, check out the down payment assistance programs, because sometimes maybe that can be combined with it or pay some of your closing costs, and whatever's going to be the best fit for you. So let's see if we have a couple of questions. Anybody have any questions? Feel free to put them in the chat or the question box. And so we have a couple of questions here. How long does a collection stay on my credit report? So Juan, did you want to answer that, or did you want me to answer that?
I can answer it. So
Okay.
typically, collection, a bankruptcy, usually stays 7 years on your credit report. So it's something to consider. I'll be there for a while.
It'll be there for a while, but guess what? We can help you with paying off those collections. Our housing counselors are here to help you, and so they can help guide you through that process if you want to pay off those collections or charge-offs that you have that are bringing your credit score down. Another question is in regards to why do I have so many credit scores? Like each company is different.
I can take that one, Connie.
Okay.
So the reason you have different credit scores is because there's three major credit reporting agencies: Experian, Equifax, and TransUnion. So each one has their own credit score. Specifically for when you purchase a car, right? There's a specific credit score when you purchase a car. There's a specific credit score when you apply for a credit card. There's a specific credit score when you apply for a personal loan. And when it comes to purchasing a home, they do a tri-merge credit report. So they pull all three credit reports and they get the middle score out of the three. And that's the credit score that they use. If there's two applicants, let's just say husband and wife, right? And one of them has the middle score is 650 and the other one, the middle score is 720. The lenders will use the lower score out of the middle score from both of the borrowers. So they'll use that 650.
Okay. So best for you to work on improving your credit score. Or if, one of you has a better credit score than the other, maybe using that person's credit. If it's a benefit for you to have a higher credit score. How about medical debts? I heard something about those are no longer going to be on credit reports anymore.
Yes, I know in 2023, if the medical debt was below 500, they wouldn't take that in consideration. And I know this year there's a new law that's being passed down. They're no longer taking medical debt into consideration when it comes to your credit score, which would be pretty good, significant value there.
Yeah, no, that's great news for people. Okay, and the last question, how do I dispute things on my credit report?
Oh, go ahead, Connie. Sorry.
Oh no, if you want to take it, feel free.
Yeah. So you can dispute something on your credit report. You can contact each individual. TransUnion, Equifax, and Experian individually. Each credit reporting agency, contact them and dispute it that way. If you go to their websites, you can contact them through there, or over the phone as well. You can call and start the dispute.
And I think annualcreditreport.com too also takes you to
Okay.
each of the sites that you can dispute it on there. And you can actually do it online, and like if you have documentation like, hey, this isn't my debt, you can upload it to them and send it over to them, and they do have to get back to you within 30 days. And if it's not legitimate, then they have to take it off. So these are some of the tips that your housing counselor is going to go over, and that I'm sure Juana has some really great tips as well. So if you do have additional questions, feel free to contact us at myhomeownership.org. As I said, we're a nonprofit agency that offers credit, budget, home buying, VA loan, foreclosure prevention, rental counseling, all at no cost. So we're here to help you. And I want to thank Juan for joining us today. And if you are interested, please sign up for our home buyer workshop. If you're thinking about home ownership, it's a great place to start to just learn what it takes. You'll get a certificate. That's good for down payment assistance and first-time buyer loans. And it really goes over the whole process from start to finish of what's needed with home ownership. So
We have a question from Paul. He says, "What are the requirements for the home buyer certificate and eligible for the 120,000?"
okay, so all you have to do is attend the class, and that's how you get the certificate. And as far as I know in Orange County, where I'm located, we have the city of Santa Ana has up to $120,000 in down payment assistance, and you would just apply for it. I did just hear from one of the counselors that I think they're almost out of money, and but it starts again in a couple of months. I think I want to say May or June it starts their fiscal year again, so then they'll have money again. But basically when the money's gone, the money's gone. So they have a certain amount allocated, but that's just one city in Orange County. But I know out in Riverside, I think they have one that's up to $100,000.
Yes. Yeah.
Right. So if you know of any of these programs, feel free to share your intel here.
Yeah, so each city typically has, and not each city. Let me reword that. Potentially, depending on the city, they can have a down payment assistance. I know Riverside County has some down payment assistance. San Bernardino County has some down payment assistance. Marietta has some down payment assistance. Right, just depending on the city that you're looking to purchase in, they may have down payment assistance that can help you out, and a lot of them are going to require you to have the home buyer certificate. So that's why we go back to this class, right? With USA Homeownership Foundation, they are a HUD-approved agency that it's giving you this class for free, right? That will allow you to have that certificate so you can qualify, or part of the qualification for the down payment assistance, depending on the city as well.
Right. And then of course with the VA loan, there's no down payment, right? So that's another benefit too. If you are a veteran, active military, we want you to consider using your VA loan benefit, because it's a great benefit and it's a great program because you don't even need the down payment.
Exactly.
So question from Paul, do you help someone that's late on their mortgage payments? And if so, are disputing escrow account balance? Yes. So we help with loan modifications, servicing errors. You would go have them go to our website at myhomeownership.org. They would complete our online intake form, and then a counselor will reach out to them and schedule a counseling session. So yes, we do help with all aspects, from renting all the way to home buying, to if you're having trouble making your payments, or if there's problems with your escrow account, we can certainly help with that as well. All right. And there again is a copy of our website. That little red button there, click here to fill out the intake, is what you do. And as I said, we're happy to help and do one-on-one counseling as well. So I want to thank Juan and US Bank and our VA Rep partners, our VA Rep chapter out in San Bernardino, for helping us out with this event. And we encourage you, if you're interested at all or have friends that are interested, need help, feel free to send them to us. And if you can, sign up for our home buyer class coming up on January 25th. And we look forward to seeing you there.
Thank
All
you,
right.
Connie.
Thank you, Juan. And thank you guys for joining us today. We truly appreciate your time today, and everyone stay safe out there.
Thank you. Thank you. Yes, everyone stay safe, and great questions, Paul.
Yeah, thank you for your questions. Appreciate it. All right. Have a great night.
Thank you. Bye.
Okay. Thank you.